Hello everyone, welcome to this episode of Market Pulse. I am Majid Maholi, the founder and mentor at LearnPriceActionTrading.com. Let's take a quick look at what the indices have been doing and are likely to do this week. This is going to be the monthly expiry week for this year, second monthly expiry month for this year. On a monthly, again, after those two candles, we were range bound from that high of 18,150, which was a good area to get into some short trades. And we did give a new low. So monthly, though the trend is still up, we are seeing more selling pressure coming in. Still, that's a demand zone that we'll be looking at. For positional investments. So trend up, pretty overextended on the monthly. On the weekly chart here, now this is getting interesting. This is that supply, main supply, which is holding. The multiple supplies here. That's one. This is the second supply. Now, if we have a fall this week, if you see there's no demand, if you have a fall this week, there is a good chance we could go all the way to at least 17,200 to 17,000. And if there is more bad news, then probably about 16,200. So we are very high on curve. No longs. Buying is not advisable. Only intraday it's advised. Otherwise, we do look like we are at least going to reach up to 17,000, sub 17,300 to 17,000 levels. So pretty far the demand zone, supply zone equation. Now this is a tested level. So when it comes back again, it could go a little bit deeper and retest 17,000 odd areas. So pretty more room for the index to fall down. So a bearish bias based on the weekly chart. Longs are not advisable. Coming to the daily chart. So our daily has given a beautiful move out from that supply zone. That's the supply zone which we have been interested in. That's a daily supply zone. So it has a pretty good target, at least up to 17,400 based on the daily chart. And since it has got gone in a little bit deeper last time, I don't see a reason why Nifty, if it continues to fall, which I do expect. That's my feel based on the price action. You never know, markets can do anything, but I feel markets might come down at least to 17,400 and then to this area of demand zone. So there is a certain smaller time frame supply zone that has got created. So if you have a pullback again to these areas, you can go ahead and short, maybe take an aggressive short or do some spreads. That's the supply zone here. And the immediate target would be somewhere close to 17 for short-term income that I'm saying about intraday or a day or two kind of trade. That's going to be the range. So maybe tomorrow, if we gap down, we could easily go all the way here. And if this is broken, then a long way, all the way up to 17,200. All right. So bearish view, avoid long trades. A quick look at Bank Nifty. Now, this is getting more weaker as compared to Nifty. As I have been saying, still, that's the monthly demand zone that I'll be relying on for investment and cash positions. There is no demand here, so we may just pause and then continue flowing down. So avoid buying any banking stocks so far. Weekly is showing good signs of a move down after that fall. That's the weekly supply we've tested. We will come down. The minimum target I expect for Bank Nifty, if it continues to fall, which I expect it to probably do that, will be about 38,300. So bigger room in Bank Nifty. And if this does not hold, then 33,600, the original demand zone where we would be looking at going long. On a smaller time frame, that's the area. I would not say it's a demand area, but it's an area which has been holding up. So we will retest that probably. Now on the daily, that's the area still where if you want to get into a short trade, this is the area where you would want to let's say somewhere around 41,500, but looks it's not easy for the index to pull back after three continuous days of big red candles, and there is no demand zone to hold it on the daily chart. So going to this smaller time frame, a better level probably would be to get into the short at these areas about 41,000 to 41,200. Pretty good reward to risk. I'm not too concerned about these demand areas. The next demand that I'll be looking at the bank nifty testing would be somewhere close to 39,000 at least based on this chart. That's the equation. I'm not too concerned. Maybe this will be a partial target, but we are close to that. So maybe tomorrow we might just open at that area. A quick look at Index moving up from those low areas again, and good spike seen. So be careful. Index is pretty low on the curve, and indices are high on the curve. This, if Index starts rising all the way up to at least let's say 17, 18, then it might even go beyond 19, and Nifty could be in at about 17,000. So cautious approach for longs. I mean, I would say avoid longs, get into shorts at pullbacks, and you can use your asset class options, futures, or intraday cash to trade. All right.